Good morning, everybody. Welcome to the Investing Bros. It is Friday, the last day of our shows this week, and we got a great show lined up for you guys. Right now, Bitcoin is continuing to hover. We've kind of moved into a sideways trading channel. That's what happens when you mix words up there and you create new ones. We're in a sideways trading channel, and the question that I'm looking at this morning is, can we hold above $26,000? Of course, right now sitting at 28, that's looking very good. We technically still have all of Friday, Saturday, and Sunday to do that. But if Bitcoin closes the weekly candle above $26,000, that would be an entire week above the very crucial 25.2 former resistance level, and could be the dagger for any Bitcoin bear out there thinking that a bigger dip is coming very soon. I'm very happy today to be joined by Chris Inks, who's going to be joining the show here very quickly. We had him a little bit before the show. There he is. There's Chris. We had some audio issues, as is tradition with this show. But we're having those fixed. So before I introduce the rest of my crew, I want to introduce Chris here real quick. How are you doing this morning, Chris?
Oh, man, I'm doing all right. It's been a heck of a week.
Oh, good. That audio is sounding clean, too. We were having a little bit of problems beforehand, but it's sounding good now. So, yeah, we're going to have Chris come on. Chris, by the way, I wanted him to share a little bit of his story here in just a couple of minutes, but I got the pleasure of meeting him last week, and I cannot express to you guys how excited I am to get to hear from him today. He is going to be on the show more often because I love Chris Inks. I'm also joined by two other men that I love very much so. And the first one sitting across the desk from me is T-Shroom. How are you doing this morning, T-Shroom?
Better than I deserved him. And I'm tweaking the lighting behind me, and I think it's looking the best it's been in a couple weeks today. So
it is looking
very
good.
Exciting. I'm doing well, and I've got a great quote for today. It actually comes from someone we've never quoted before. Walking with a friend in the dark is better than walking alone in the light, from Helen Keller. So that is an excellent quote.
It is true.
Yeah, Helen actually had a bunch of really good quotes. We might be on a Helen spree here for a couple of weeks. We'll see.
I mean, yeah, she
for
did.
Weeks,
she did have a lot of good
nothing
quotes.
But Helen Keller quotes.
Yeah, that is very true. I can attest to it in my own life. I mean, I growing up went through a lot of garbage, but I had like two best friends that we kind of. It was weird. We always seemed to go through the same stuff all together. Made it very, very not enjoyable. Enjoyable is the wrong word, but doable.
Yeah.
So great quote there. We're also joined by Army Piper this morning, freshly retired from the military, but he's keeping the name Army Piper. How are you doing this morning, my friend?
I am free, calm, and centered, and I have no responsibilities except for to the investing bros in the community. So that's it. I'm doing great. I can't complain.
Come on. That's what you love to hear. Go ahead, everybody. We got over 40 people watching right now. Go ahead and smash that like button early on. We're going to get more viewers here in just a couple of minutes, but go ahead and smash that like button. If you are new here, let's say you're from the Chris Inks community, go ahead and subscribe to the channel, where every single weekday morning we go live from 9 to 10 a.m. Eastern Standard Time, soon to be 10:30 Eastern Standard Time, covering Bitcoin and crypto and stocks. We cover the technical analysis. We cover the news, everything you need to know to be investing as wisely as possible for yourself. Make sure you are a part of this very fast-growing community. Before we dive in and we get into content, we have to do one of our rituals that we always do. And if we don't do it, we mess up. But I made another mistake this morning in it, and I forgot to check who the first commenter was before I posted that little poll. So I have no idea who was first. T-Shroom, who was our first commenter of the day today?
Our first commenter for today is
Al Bundles.
Al Bundles. Very nice. Al Bundles, congratulations. We also have in chat a mellow fellow. He's been on first commenter here for a long time. So good to see him in there early. Elo Brown is here. Jay and Carr is early on. Let's see. Eric Brubaker is here. Yair Navarro, Elliot Locke, CBD Suddy. Who else do we got? Joe Nickel, Eric Brubaker, Mike Play, John Kahn is here. Curtis Rorick is here saying, welcome, Mr. Inks. I'm so excited about that. Cryptex is here with that blue wrench this morning. Gregory Greziak in the building. We know that name very, very well. Good to see you here, Greg. Crypto Ben Franklin, our favorite non-president. is here. Mr. Bitcoin is here. Ninja Glock, Jeff Sullivan, Crypto JMP, Z Canceling Radio. Who else do we have? Elo Brown. I don't remember if I said Elo Brown yet, but Max PP, Eric Wallen, Crux of Crypto, Data, Jojo, Jeep Girl, and get a couple more, and then we'll jump in here. Grand Roofing Incorporated, and the last name I'm going to read, Crimson Caravan Company. Thank you to every single person who is here. I gotta say one more because he's very special. Steve Shrum. Steve Shrum gets the last name of the day. If I did not read your name, it's not because I don't love you. It is just time to go ahead and move on with our content. And before we go over and talk to Chris, and I want to hear his story, I want to get his remarks on what's happening in the market. You guys are going to be very excited. We do want to make sure we're not missing anything big. We, of course, this week had some really big news with the FOMC meeting. But Piper, is there anything on the horizon when it comes to more macro information that we need to be preparing for over the next couple of days or weeks?
Yes, Tim. So looking here this morning, about 37 minutes ago, we got the durable goods orders. Previously, it was down 5%, which meant that demand for orders was down. The consensus was that it was going to be up 0.6%, forecasted at 0.7%. Actually came in down 0.1% this morning. Not as bad as the previous month's orders, month over month, but we did have a 1% drop in the amount of orders this month also. So I guess technically, if you look at last month was down 0.5 and now we're down 0.1 of a percent, it would be a total of 0.6 in the past 2 months. So demand is coming down, which does mean that we should start to see inflation come down. So not looking too bad there. That's about all we got today, except for Fed Bullard is going to be speaking today here in about 23 minutes. Not sure what he's going to say or what he's going to put out. It's not exactly Jerome Powell, but that's what we got today.
Yeah, that's going to be interesting. Go to my screen real quick. We'll catch up. This is actually ridiculously high right now. We got, to be fair, we have 40 days before this actually, we have our next FOMC meeting. But right now, 92% on the CME futures tool are predicting a pause. We're currently already at 475 to 5 on the interest rates. But we're predicting right now, this morning was 98% that we're going to have a pause. It's shifted a little bit, 92 to 8. But even more interesting, flipping over to June, they are predicting with 64% that we are going to have a cut in June. This, of course, goes very much against what Jerome Powell just said on Wednesday, that they're anticipating, the Fed is anticipating one more interest rate hike and then a pause for the rest of the year, closing out December at 5 to 5.25. But this Fed tool says, nope, they're predicting the likeliest opportunity to be 375 to 4. So we will have to continue to monitor that as it goes. Last update of the day before we throw it to Chris. We are down on the crypto, the Bitcoin Fear and Greed Index. Not down a lot, but we're at 61 today. So, of course, that's a lot lower than where we were a couple of days ago, all the way up at 68. We will continue to monitor all of that. But with that said, instead of jumping over to TA, you can go off my screen now, Piper. I want to go ahead and introduce Chris. We did a little bit in the beginning, but I want to first, before we jump into any analysis, get to hear more about who Chris is so that you guys can understand him better. Make sure after this video today, you go follow him both on Twitter and his YouTube channel. Links are in the description below. But Chris, tell us a little bit about some stuff we were talking about yesterday. How did you get into trading in the first place? What is your story?
Well, anybody's been following me for a bit of time, they kind of know this, but basically as a teenager, which was a very long time ago, I had decided that I just didn't really want to work for anybody. And so there's two ways to do that. Either you kind of do your own thing, you create your own business, go on with that, or you learn to trade. And so I've actually done both, but I've been trading now since, I got started back there in 1995. So before we even had all this widespread internet and whatnot.
Mm-hmm. Yeah, no. So I know you told me a story. So you really got heavily involved as a teenager, but in college, and you were telling me the other day about being in a final and trading during your final. Tell us more about that story.
Oh Lord, I don't know if I should say this publicly. So I was in. Actually, this is a law school story. So I was in my my second year of law school, and I was taking my partnership taxation final. And anybody that's been to law school, these exams are usually 4 hours or more. So while I was taking the exam, I was actually trading as well. So I think I came out with some like $1,300 or $1,500 in profit and passed my final while we were doing that. So yeah, probably not the best story to share publicly, but
Hey,
I've got the diploma and everything. I graduated, so it's all good, I guess.
the reason we need to share that story is because if anyone ever wondered how much of a walking W this man is, my man passes a final and $1,300 profit on a trade. Do you remember what you were trading during that class?
Honestly, I think I was probably trading forex at that time.
Gotcha.
I'm pretty big into forex more than anything else, and that was right about the time I was just getting into crypto. So yeah, it's probably forex.
Well, I think that's a very interesting little segue I'm going to have there for that one. Is with everything we're seeing happen right now, especially that news that broke a couple of days ago about Russia's plan to now do trade in the Chinese yuan with countries in Asia, Africa, and then Latin America. What are you seeing in the forex market right now? What are you seeing as some good juicy trades? Is everything going into yuan? Is that the big pump right now, or is that off?
No. I mean, if you're trading forex, I'll be honest. Anybody that's really trading, you just want to stick with the majors.
Mm,
I mean, the volume itself is basically done by a few banks, worldwide volume. But yeah, I mean, you're going to get the more exotic you get when you start looking at, um, going that way, or going to the Russian ruble or anything like that, you're going to pay a lot larger spread. And so you just want to stick with things like the Euro USD, Cable USD, Loonie, Canadian dollar there. Things like this where your spreads are only, a couple of pips at the most. And that way you're paying less to get in and out of your trades. Once you're getting into things like the Mexican peso or all those other kind of ones, you're really getting a lot larger spread. And especially for newer
mm.
traders, that can be really dangerous.
Oh, that makes a lot of sense. That makes a lot of sense. Well, we're going to transition to Bitcoin here in a second, but let's kind of move forward in your story. What got you into trading cryptocurrencies? How long have you been in crypto? And yeah, tell us a little more about the story of what switched you from more traditional finance into doing a lot more with crypto.
Okay, like a lot of people that've been around a while, a little bit older like myself, I heard about it back in 2010. I thought, man, yeah, that sounds cool. I probably need to learn about that mining thing and do that. And life just kind of got in the way, never got around to it. 2017, I was taking a emerging technology law class, and my professor said, "Hey, y'all have to follow me on Twitter because we're going to do, I'm going to give you information for class in there." I think she just wanted us to follow her. But in doing so, I ended up hitting that crypto Twitter rabbit hole somehow. I don't remember how I got into it, but got into it, and I was like, oh, wow. The TA was really bad. 2017 was all about pump and dumps, and
Mm.
people were kind of losing their money left and right. And so I started posting some ideas, some trading ideas on there. And that's kind of really where I got into it. I got in Bitcoin and bought my first Bitcoin there in January of 2017.
Mm.
Soon after, I think I bought it for about $1,170 or $60 or something. I bought
Very
Ethereum for
good.
about $15.61, and then I bought Litecoin for $2.79, I believe. And then the big one was buying XRP there, right there. I think right into Q2. I bought it for about 60/100ths of a cent at that point. Yeah. So that's where I
Wow.
kind of started into it.
Wow. Go share my screen here, Piper, real quick, just so anyone who's wondering what was happening back in January of 17. We're hovering right around, where are we? Right around here. Right on here. Like he said, 1100 or so. And of course, he got in right before a nice little spike, nice little rally all the way up here in December. Here's a good question. You bought at a very good time. Did you sell at a good time? What was your Bitcoin holding looking like after your first entry?
Yeah, so I'm a trader. I kind of get into investing so often, but really I'm more a trader than anything else. So I do
Mm,
have some that I bought back then that I still hold today. But back at that point, I started my company. Let me see here. Actually, that's September. And I remember as we got into December there, somebody, I can't remember who it was, said something like, 80,000 Bitcoin by February. And I said, okay, this is the top here. This is, we might make it to 20 and a half, I said, but, on a push maybe, but this has got to be the top when you start seeing that kind of exuberance coming out of there. So, and that was right there before obviously we didn't quite make it to 20 and a half, but we were right there, 19 and some change doing that. So yeah, I was right about that point.
Yeah, it's a good thing that was the last time an outrageous Bitcoin prediction was made for the tops of bull markets. We've now seemed to get a much better handle on making these calls. No, I want to transition into more current stuff. So this is what's really cool, and you guys are going to hear more about this. But one of the things I love most about Chris is he's a man after my own heart. He loves the Wyckoff theory. He's another Elliott wave genius. So I'm going to set the stage here and then ask some questions, Chris. Go ahead and share my screen once again, Piper. So right now, Bitcoin is hovering a little bit of a sideways trading channel, as well as kind of respecting a former resistance level of a megaphone pattern. We're using that as support. This is going to be really huge. And in my analysis, and the way I'm kind of reading this, let me go back out actually to the daily chart. As we start to get closer to the end of this week, this is what that title is all about. Let's actually go out to the weekly chart to show this. We started this week off at $28,000 roughly. And if we were to continue this and close this Sunday above 20, in my estimate, at least 25.2, but I'm going to go ahead and just play it safe and say 26,000. This could be a very big blow to Bitcoin bears who were expecting a big dip to come, because that would not only be two candles closing above former resistance, it would be one weekly candle spending its entire time up there. Then you add in, when you pull up our SMAs, we broke through what was former resistance of that 200 SMA. Closing above that 200, which right now is sitting at 25.5, would also be huge. And as you know, we love Chart Prime here on Investing Bros. We're wrestling right now with that weekly dynamic reactor, but as long as we stay close to it, we're getting closer to being able to turn this back green for the first time since back in May of 2022. It'll be almost an entire year of a red weekly dynamic reactor. These are really big details, but I want to throw it back over to Chris. And Chris, feel free to share any chart you want and walk through this. But do you agree with that analysis that a weekly close above 26 is a massive win for bulls? And where do you see Bitcoin going? Should we hold off and we stay high above 26,000? Where do you see Bitcoin's price going here in the short term?
All right. Well, yeah, I just looked on your share screen there. It says Google Chrome. So I am not using Google Chrome, so I don't believe I can share my screen here.
Oh, no.
But yeah, I pretty much agree with that. For me, the big thing is the weekly pivot, which sits right about, if you're just using traditional pivots, it sits right there at about 26,750, 26,800.
Okay.
And so we actually got, last week, we got the breakout, that impulsive breakout above it. So large candle spread, large spike of volume. That's what we look for. We got that this week. We pulled back to it, and everybody was still looking for 25, and that's when we popped up, but we bounced right off that weekly pivot. So if that weekly pivot holds, generally what we look for then is a rally up to the R1 pivot at least. And so that would take us up there to around 38,000. So, and I think if we're getting there, I think there's a good chance based on the rally off that November low that we could potentially even just push on up into the mid 40s before we even get, to finish like a wave one, before we even get like a wave two pullback toward the weekly pivot. But the idea on that weekly pivot is basically we stay above it, we rally up to the R1 area at least, then we pull back, we retest the kind of pivot area, maybe a little bit above it, and then we break out higher into wave three. And that's when you're approaching Elliott wave with pivots, that's generally one of those things that we kind of look for. So you can get 5 waves up off the low into the R1 pivot, pull back to the pivot, and then continue on higher.
I think that's a good question, and people are able to see my screen at the moment. You can watch my screen. That's frustrating if we can't share your screen. Maybe we'll be able to fix that.
You just have to go over one tab. When you do the screen share. When you do the screen share, you can just do window instead of Chrome tab.
Yeah, no, I think it says Google Chrome required. Sorry, but Google Chrome is required for screen sharing, and then okay.
Wow.
Oh, okay.
Tim, if you want to show your stuff real fast on the chart, he can reconnect with Google Chrome. It'll only take him a second, and then I can share your screen instantly. So,
I guess the good question would be, Chris, do you have Google Chrome you could reconnect connect with?
I believe so. Yeah.
All right. Well, so here, okay, yeah, there we go. This is gonna be fun. Yeah, go ahead and reconnect. I'm gonna draw this and refresh it for you here in just a second. When looking at Elliott waves, there's been a little bit of a disagreement on what Elliott waves are. So I'm very excited to hear what Chris has to say about this. I have seen certain people, and what I see is more often than not people that lean a little more bearish are gonna have this opinion. Everyone's pretty much in agreement that our first wave from all-time highs comes down here back in January 2022. Everyone agrees that wave 2 comes up here to this peak in March. Where there's disagreement is some people will draw wave 3 all the way down to the year low in November, and now they're saying that this current wave is just a 4 and we're going to have a bigger wave to the downside. Some people saying as low as 5,000. Some people say we're just coming back down here towards 11. This is a way a lot of people that I tend to find treat the whole situation more bearish will read Elliott waves. But in my opinion, I'm looking very much at this right here with our fourth wave coming up and then our fifth wave coming down, which would put us into more of an ABC correction. I'm very interested to hear what Chris thinks, which one he would play out and which one he would draw here, and then how he would draw an ABC correction coming here very soon. Or even, are we going to go into a phase where instead of an ABC correction, we will see a 1, 2, 3, 4, 5 to the upside. While I have studied Elliott waves and I've learned a lot, there's so many people that know more than me. This is one of those topics I've told my community on several occasions. Whenever you're learning Elliott waves, sometimes you'll learn one new piece of information, but then in that same article you're reading or video you're watching, you'll unlearn 2 or 3 things that you thought you knew before. I've never seen 2 Elliott wave experts agree 100% of the time. However, it still is a very valuable tool if you read it correctly. So do we have him back in yet, Piper, or should I continue on?
Continue on. He's not back in yet.
Continue on. All right. Let's keep going on here. I'll give you some of my observations while we are waiting on him to come back in here. Like I said before, we're in a sideways trading channel that is heavily respecting this also rising level of now support on that megaphone pattern. Even if we drop back down, you guys can see he was kind of talking about weekly pivots here too. There's a setting, and I don't have it up right now, and it's been a while since I've used it. It's one that my good friend Magic Internet Money uses a whole lot that he's referring to when he's talking about weekly pivots. But right now in this sideways trading channel, I'm going to continue to watch this as long as we stay above 26,700. Again, as he mentioned, if you had that tool up, would be a weekly pivot to the downside. The bulls are going to continue to hold very, very strong. And again, do not underestimate the strength of closing a weekly candle above this level, above at least 25,200, if not above 26,000. And I talked about this the other day, and I say this with absolute respect for him because he is a very good technical analyst, but this was the level. Remember, one of my favorite bears to follow, he just leans bearish, is Crypto Savvy. I would love to have him back on the channel here very soon, but he was one when on our channel talked about what he's looking for to change his mind is not just a weekly close above 25,800. He wants to see a weekly candle not only open, but close above that level as well. Well, sure enough, yes, we still have like 3 days left until this is official, 2.5 to be fair, but it's very much looking like we could have that happen. And that I'm very interested to see how his mood changes. Of course, this stays with the prediction that we're making here on this channel that more than likely we're going to see, I'll delete this and get this back up when Chris comes back in, that more than likely we are going to see a move back up at least to the 0.5 level, if not to the golden pocket here with Fibonacci. These levels are between 42,000 and 50,000. This would be on par, very similar to a move we made back here back in 2018, 2019 during the last bear and bull market. So keep your eyes on that. I still think there's a lot of things coming in. While we're waiting on Chris, we had some breaking news this morning in case anyone's wondering why Bitcoin was dipping. T-Shroom, it looks like Binance paused their spot trading. Is that correct?
Yeah, you can go shoot over to my screen there, Piper. I'll fill you guys in on the details. So Binance, their official Twitter account, was expressing that they are aware of an issue impacting spot trading on Binance. All spot trading is currently temporarily suspended as we work to resolve this as soon as possible. New updates will be shared here. That was at 7:30 a.m. today, this morning. A lot of people saw it. Now, there's been an update, which is that Engine 1 is back online. Do I know what that means? No, but that sounds good. It sounds like an improvement. Still need more time to do reconciliations and for other engines to catch up.
Yeah, and this is what, go back over to my screen here, Piper. This is what we kind of saw this morning. I mean, we were sitting here live. We were sitting here wondering, why did Bitcoin have such a drop? Because we began planning here around 7 o'clock or so. And I just watched this hourly candle drop down, come down, and you see the wick touches perfectly right on that rising level of support now in that megaphone pattern. But it was a very curious thing. I was like, man, why did this happen so fast? To be fair, it even if I went down and showed you guys, let's look at the 30-minute chart, it happened in the back half. The first half hour of 7 o'clock was actually green. It all happened very, very quickly over just a couple of minutes. So this was very puzzling. Having this piece of information makes a lot of sense with Binance having to temporarily pause. But I'm assuming that update that you're reading, T-Shroom, led to the very next hourly candle here between 8 and 9 o'clock, where we shot back up as high as 28,190. Currently, we are hovering and trading right at our hourly dynamic reactor here at 27,800, squarely right, like smack dab in the middle of this nice little trading channel. So this is going to be a process to continue to watch. We also had other information that Deutsche Bank this morning is also reporting some problems. While we continue to wait for Chris and Piper, let me know when he's back. But T-Shirt, why don't we go ahead and talk about Deutsche Bank here a little bit, and we'll bounce back over to the chart.
Absolutely. And here in America, it's tough to figure out how to pronounce this, but I believe it's Deutsche, even though it's spelled so differently than that would imply. All right, moving into the headline there, the Deutsche Bank shares slide 14% after sudden spike in the cost of insuring against its default. Now, that you understand credit default swaps. So I will break that down for you here in just a second. But let's get into the details. The German lender Frankfurt listed shares retreated for a third consecutive day and have now lost more than a fifth of their value so far this month. Credit default swaps, a form of insurance for a company's bondholders against its default, leapt 173 basis points Thursday night from 142 basis points the previous day. So this isn't what you want to see. You don't want to see that type of movement, because that indicates that the underlying asset, in this case Deutsche Bank, is falling out of favor. And then if you've been following the Credit Suisse story, this paragraph here is important. Deutsche Bank's additional Tier 1 AT1 bond and asset class that hit the headlines this week after a controversial write-down on Credit Suisse's AT1s as part of its rescue deal also sold off sharply. So that is these are not adding up to financial stability, especially not in Europe. So there is more than likely more room for these banks to continue to show weakness. And I pulled up. I don't know exactly what all of this means, but I pulled up because it mentions the article mentions a Tier 1 capital ratio, and there's a website, banking data, that you can go check out the ratio, and you can sort banks by the ratio. And there's these banks up top that have a low ratio, like PNC Bank, maybe one you've heard of, Pacific Western, Truist Bank. But at the low end of this list is Deutsche Bank, and so it has a 57 ratio. Again, this ratio, basically, I have it pulled up here. This ratio, Tier 1 common capital ratio, a measurement of a bank's financial strength by comparing its core equity capital and its total risk weighted assets. So you would want to be on the right side of this if you're hoping to be a solvent bank. But what I will point out is there's a bank that's even higher on this ratio than Deutsche Bank. So that's Beal Financial Corporation. That doesn't mean that this bank is going to go insolvent. I'm just pointing that out. And it has a much higher ratio than Deutsche Bank there. So just some continuation here of this narrative of bank instability, Tim, is what I'm seeing.
Yeah, and I think, as we continue to wait for Chris to come in, we're gonna move on with some other stuff as well. But my comments here about the bank, this is just further confirmation of stuff that we have been discussing here for a while. It makes a lot of sense when you think about what Jerome Powell and what the White House is doing. They're trying to stave off mass panic and mass chaos because of banking concerns. And while I don't think hyperinflation will do the things that some people say, like the predictions of $1 million Bitcoin in less than 90 days, by former CTO of Coinbase, there is a very real chance that we're going to see banks continue to fall. And this is just another story kind of showing that the market is not buying. It's not buying Jerome Powell and the White House's confidence that banks are safe. That marketing ploy of banks are safe, banks are resilient, trust the banks. It's not working the way they thought. The thing is, money is moving into crypto. So let's look while we're waiting on Chris here. And if we don't get back from him soon, we might have to make a pivot on the show. And maybe we'll have him on again soon because he has a lot of great insights. One way or another, though, you guys are going to hear from him a lot more on this show. Go over to my screen here, Piper. Let's do some TA on some coins. One that we haven't necessarily done too much TA on is Cardano, but Cardano starting to get a little bit more of an upward momentum going here. Currently, the price of Cardano is hovering at 36 cents. Of course, we were just back up closer towards 39 just a couple of days ago, but you will notice when we pull down our Fibonacci retracement tool that we're wrestling right now with the golden pocket, finding support back at the 0.5, but watch Cardano potentially be able to make some rally. This is something we talked about a couple of weeks ago, how Cardano can be a frustrating coin to follow on charts, but when it's ready to take off, it goes ahead and takes off. A lot of stuff coming out with Cardano. They're continuing, despite the fact that some people just do not like them, they continue to build at a rate that is astounding, and I still hold a special place in my heart for Cardano long term. But could we see the momentum start to fall? Again, I think that everyone should keep their altcoin thought in check. I think the expectation for altcoins should be a little reserved. I do believe this rally we're about to see, altcoins will go up as well, but Bitcoin is going to be the big dog coming in. So make sure you guys keep your head on a swivel when it comes to these charts. I do believe I hear something in the background. Is Chris back in?
Yeah.
Yep. All right, sweet. Well, let's go back over, Chris. Thank you so much. Are you able to share your screen now?
Yeah. Let me get that done there, man. That was fun. Let me tell you.
Hey, listen, this is the Investing Bros, where we are so used to technical difficulties, we've learned how to just keep on rolling.
That's right.
Because the show must go on.
Yeah. I think I've got it sharing there.
All right. Yeah. So kind of now that we've moved away, let's get back into this. We're talking about Bitcoin, everybody. Anyone who just joined, thank you for tuning in with us this morning. We got Chris Inks here on the channel discussing Bitcoin. And the question I asked him, and actually, I guess I have to go back and show some stuff. So Piper, really quick, go back to my screen and let's go out to the weekly chart. What I kind of prefaced there, Chris, I don't know if you were able to hear. I want to hear what your thoughts are about Elliott waves. There's two different ways that I've seen people drawing Elliott waves here more recently. Going back to the all-time high we had in November. So everyone agrees on wave 1 and 2. The real debate is on wave 3. And I see bears come all the way down here to November 22nd. I myself more went to this June 22nd, made wave 4 right here. Very small wave. We've learned about this a couple weeks ago in Investing Bros Discord about how to draw these. But that would make wave 5 the exact bottom. How do you have your Elliott waves drawn? Is it like this? And would that mean we're in an ABC correction? Or could we potentially be flipping from a 1, 2, 3, 4, 5 to the downside into a 1, 2, 3, 4, 5 to the upside? Now let's go ahead and go over to your screen and you can take it away.
Yeah. So basically, it all depends on how you count this up here, right? So did we end right here, and is this a flat, or did we end up here at the top? And of course, this rally or this decline here, that's the issue. It gives people a lot of different things to look at, right? Right now, I'm kind of going with the idea that we ended the rally here, and then this was A, this was B, and so we've got this flat correction, so we have 5 down for C. So that's kind of how I'm looking at it right now. Like I said, you said the bears kind of looking at this. So a lot of what, if this was to be a bearish count here, the way I would have this would be a 1, 2, 3, and then probably ABC up, ABC down, and then 5 up. But the problem with that all of a sudden is, well, we've got 5 right here. So, again, I don't think the bear case is very strong at all. If we look at this range down here, this does appear to be accumulation. You've got your final, according to Wyckoff, right? Mm-hmm. And so you've got your final, capitulation with those 3 capitulations coming in. The final one here, FTX. And,
again, it was bought up. It was heavily done. I mean, you see all the volume coming in, but it didn't drop much. To me, it says terminal shakeout. And then we rallied back up as I was telling people that we should. So here we are. I mean, I don't think the bear case is really strong at all. I think they keep grabbing right now. And, until something else happens, I think you're silly to be thinking anything other than continuing to rally, because you've missed this rally from 15 and some change up here to almost 30,000. You've missed almost 100% rally.
Where do you see using that and using Elliott waves and Wyckoff theory? I don't know if you heard it, but we on our channel, we've talked about looking at that historical precedence back in 2019, that kind of premature bull rally that ran us back up to the golden pocket of Fibonacci. If we were to see that again right now, the Fibonacci golden pocket is sitting at $50,000. What I've kind of said is, do not be surprised if we run up to $50,000 and then get a 50% pullback down to this $25,000 to $27,000 levels once again before the real bull market starts. Do you see something similar to that playing out, or what are you seeing and kind of expecting with this price movement?
Yeah, exactly. So that's that whole idea of what I was talking about earlier, where you could see this when you're looking at the pivots here, and you get the rally up at least to the R1. But again, based on what we've got going on here, I could see that hitting those mid 40s or even 50,000 in that area. I'm not saying that's what has to happen, but right now, as long as the weekly pivot holds, then if you're a pivots trader and you understand Elliott wave, as long as that pivot holds, that usually gets you a wave one up at least to the R1 pivot, if not further, because when you pull that back toward that swing low, that 50% retracement sits right there at the pivot, at the pivot itself. So if you're rallying up here, you can see I've kind of got this target up here around 42. That's a minimum kind of target. We're getting up there. If you're getting up here around 50, get you pretty close. Again, you're getting toward this resistance support area here. And the thing I like about actually, if we were to see this continue to rally up into that 40s, maybe 50 area, is that the pullback is then this structure right here that we're kind of butting up against right now. So we rally up. The idea would basically be we rally up through this, pull back, continue up toward here. That gets us wave one. Wave two pulls back into this. It finds support here and heads up. We talk about what is max pain. Well, max pain right now is that everybody and their grandfather was telling you that, price was going to continue going down here. And this thing continues rallying up, and you have these big accounts that are bearish saying, oh, it's going to go down. It's going to go down. They said, here, short here. It went up. They said, short here. It went up. They said, short here. It went up. They said, short here. It went down. They said, oh, yay. And then back up, right? Now it's up here. They're saying short here. It's going to new lows, right? And so max pain for a retail trader, basically, because when you talk about max pain, that's what you're talking about. I know we say traders, but we're talking about retail traders because they're generally not as well versed in trading or experienced. And max pain for them is missing this whole thing. They were promised it was going to continue going down. And maybe they've tried to short all these times. They keep getting stopped out on those shorts. But now they're up here and now they're scared to short, or they're scared to long, because they don't know what's going to happen. Now, if it looks like to them that it's going to continue up, so psychologically they want to get in, but they can't convince themselves to do it because they don't know what they're doing. And the big accounts out there are saying, oh, it's got to go down. It's got to go down. But it continues to go up. And so there's all this confusion. That, to me, is what we're talking about when we say max pain. So to get a pop out above here, a nice impulsive, weekly candle here to break out through this resistance, you've got all this, inefficiency right here. It should take us right up into this area at least. And so again, people are just kind of sitting on the sidelines wishing they were in.
Yeah, and I think that's a really good observation you're making right there. I've been talking about this more recently, especially as we broke. So to me, 25.2 was a very, very big level. That was the former August resistance level, and it shifted us from a phase of being in an accumulation or a consolidative trend into a bull trend. And anyone who goes back and looks at technical analysis, here's a problem with some people. And to be fair, I made the same mistakes when I was first starting out. Sometimes people treat technical analysis or Wyckoff or Elliott waves as like a firm rule that cannot be broken. And the minute you see a flash of something bullish, you should buy. And the minute you see a flash of something bearish, you should sell. But the more you actually start to watch the charts, and when you actually start getting money involved, I think Jordan Peterson said it well at a conference last year. He said, I had to actually buy Bitcoin so that I was emotionally involved to actually pay attention and learn more about what's happening. Same thing in trading. Same thing with technical analysis. You can learn technical analysis left, right, upside, downside, but until you're actually putting your money into the market and making trades on it, you're not emotionally invested to really find things out. And I've noticed when you're in bear trends or bull trends, let's start with bear trends. When you're in bear trends, you will get a lot of bullish flashes that will tell you to buy. And they will end up wrecking you because they were wrong because the trend is bearish. Same thing now as we're moving back into a bull trend, but go ahead and just go back and look at, actually share my screen here, Piper. I've talked about this several times, but I just want to show you guys, even with this phenomenal tool, right, we have right here on Chart Prime, this oscillator here, look at all of what we would call like the tree ornaments or the decorations or the candy. Look at all of these flashes we have up top here during this bull market back in 2020 to 2021, right? One of them ended up being a good call. This one right here, good call. We peaked, we dropped 30%. But look at all these other ones that people probably ended up either taking profits on a long or entering shorts thinking, oh, there we go, we flashed oversold. It's not just the oscillator. We're hitting former levels of resistance. We're hitting Fibonacci levels. People just look for any type of bearish signal to say we should enter a short, and yet it ignored all of them. Yet every single little bullish signal, we get a little bullish momentum, we get bullish divergence, those respond with massive bullish moves. My point here is that during an accumulation phase, when you're moving more sideways, not up or down, just sideways, you can make some good calls on both bullish and bearish trends. But now that we have broken this form of resistance, this flat top here of this little consolidative trend, we're entering into a bull trend where, despite the fact, like here more recently, we've gotten a predicted reversal down, it got ignored. We got overbought with a reversal triangle, it got ignored. You're going to see this happen a whole lot during bull trends where everything will flash and everyone will tell you, there we go, bearish signal, bearish signal. But you got to learn the psychology of a trader and the psychology of reading charts of saying during bullish trends, you have to be hesitant at bearish signals and look for you have to look for massive amounts of confluence to actually find a resistance level. Do you agree with that point, or is that what you found in your trading experience, Chris?
Yeah, exactly. And it's the thing that I teach people, every day. You trade in the direction of the trend. The problem is people are emotionally attached. This is why the way that we look at the charts actually works, because people are predictable. Charts are, the markets are not random. There's all these random walk in Wall Street, all this kind of stuff. Charts are not random. They're this visual display of emotion in the aggregate, right? So you're talking about emotional people involved in the market who tend to trade emotionally, the retail traders, right? So they're predictable, which is why Elliott wave tends to work. Now, those who don't really study Elliott wave and whatever, they don't believe it works, but it's like anything. It's like any other skill. Everybody thinks they can come into trading and, because they can enter, that they should know what they're doing and be profitable, the first day, the first month or whatever. It took me 4 years of losing money before I finally said, listen, I need to be more serious about this and really kind of sit down and learn. And that's when I started putting it together. And exactly what you're saying there, but the problem is people are really emotional. So you break out of the trend or what you recognize as a trend once you've been doing this a while, right? And then you start finding reasons to think, oh, there's a bigger trend or it's a bigger trend or whatever. And that's the biggest thing that traders generally have to deal with is themselves. Everybody thinks they're out there, that they have to beat everybody else. A lot of people view trading as a zero-sum game, but it's not. If I get into a trade and I exit at my take profit, and then you get in and you go long that and you're making, and it continues going up, I didn't lose anything. According to my trading plan, I hit my target. I got in where I wanted. Even if I'm doing my trading plan, in my style, and I hit my stop loss there to tell me that I'm wrong in the way I'm thinking. As a byproduct, it saves me money. So even when it does that and you buy and you get the long, it doesn't mean that it's a zero-sum game that I lost on there. I'm sticking to my trading plan and, my system. And your system should work over time. It's not going to get every trade correctly. So I think, a lot of that plays in with the retail traders when they're trying to do that. And then so you say what you say there, and then they're like, oh, but, it's always but. And they find some other way. They zoom out to a larger time frame. They find some other reason to negate what's, going on at the moment there.
Absolutely. Absolutely. By the way, we have 130 people watching here with only 70 likes. Go ahead. This is great content. Smash that like button if you guys are excited about everything you're hearing here. I want to throw it to Army Piper. He also has a lot of experience with trading. What are your thoughts about this topic, Army Piper?
Yeah, so taking a look at my chart here, Tim and Chris, great to meet you. What we got going on here, something that you were talking about is about trading the trend. And so one of the things that we actually go heavily on into our community is about our dynamic reactor. Anytime we're below it, you're looking for shorts. It's bearish. Anytime we are above it, then you're looking for, there's longs because we're now bullish, right? So if you actually look at this and look at every time that we've had major rejections under the dynamic reactor here. So we break down through, we got retest here on our predictive trade lines here. We also got another one here off the bottom there. Looking here, we got a perfect touch to it. And then looking here, we got a perfect uptrend. If you trade this as bearish below, bullish above, you will do exactly what Chris's strategy is, and that is looking where the trend is, where is the support or resistance in alliance with that trend, and where do I enter my shorts and longs at. So yeah, I just wanted to show that if you follow that strategy with the dynamic reactor, you're always going to be following the trend, and it works out great for you. So
Yeah, no, Chris, in a future call, I'm gonna have to show you more. The chart prime, I wonder what you're gonna say about it when you get to see it. It is a phenomenal tool. By the way, anyone who wants to use it, you're gonna see Army Piper, T-shirt, and myself using that all the time. Link down below. With our link, you get 45% off your first month or your quarter. So make sure you take advantage of that. But something that you said earlier, Chris, that I've been trying to hammer home. Like right now, T-shirt and I, we're working on building a course for people over in Chart Prime to teach them how to trade. We talk about our community all the time. I've used this expression probably 3 million times in the last 2 weeks alone while shooting content or talking on the show. The goal of trading is not to become a perfect trader. In fact, that's actually probably one of the things that discourages and makes a lot of people quit trading in the first place is they might even get 1 or 2 good trades, but then they lose a trade and they get so scared and so freaked out, they want to change their strategy or walk away from trading altogether. The goal is not to be a perfect trader. The goal is to be a profitable trader. And just doing some very quick math. Like I was showing someone, there's a video coming out later today over on Chart Prime where I show a trading strategy using the oscillators that if you would use 5x leverage and traded 20% profit to 10% stop loss, over the period of time, you would have entered 10 trades and 9 of them was successful. Well, guess what? That one loss, in that one loss trade, you're going to see this later, you would lose 50% of your portfolio because, of course, 10 times 5 is 50%. That's a discouraging thing. If you enter a trade and you lose 50% of what you're holding, that's discouraging. But if you win 9 out of 10 or 8 out of 10, in this one example, you would have turned, if you had $1,000, into $100,000, even losing one trade. Let's say you lost 2 trades, you still would have turned $1,000 into $50,000. Let's say you lose 3 trades, you still would have turned $1,000 into $25,000. It's not about being perfect. It's about winning more often than you're losing. And when you win bigger than when you lose. So everything you're saying, Chris, I'm just so glad that this is continuing to just just pound in on our audience. I really hope people who have struggled with trading recently are grasping all of this and learning. It's okay to lose from time to time, but you want to learn from all of your lessons. You want to learn from your mistakes and keep moving forward.
Yeah. I mean, exactly. I mean, that's everybody's, they want to look for the golden ticket, the golden goose, whatever it is that gets them that secret sauce. Everybody comes in, they're like, if I can only find this one way to trade, that'll always make me profitable, right? And the problem is there's nothing like that out there. At the end of the day, the way I teach it is risk management. That's the golden goose there. That is that holy grail that people are looking for that they don't understand, but it's boring. Nobody wants to do proper risk management. It's boring. A lot of times they can't get, huge trades. But, if and then they look at the trade as each trade individually, and so they take each trade as its own trade rather than developing a system. And that's, these are the keys. You need to have a system. You need to use proper risk management. If you could do those 2 things, the odds are likely that you're going to win more times than you're going to lose, and your winners are going to be averaging greater than your losses. And, but it doesn't happen overnight. It takes time. And the biggest thing that traders have to deal with, you can sit there and we can teach them, listen, this is how you use this indicator. This is how you use this system and whatnot. But it will always be the emotions that they have that make it difficult. I always say trading is simple. All it is going through liquidity, right? Liquidity to liquidity is all it really is. But it's not easy. And it's not easy because you have to deal with your emotions all the time. But if you can understand that as a trader and understand that that's the difficulty and getting that under control and working with that, which is not easy, because if it was, everybody'd be doing it, right? But if you can, then all of a sudden these systems that are out there, they start working. They start producing what you're looking for, because you're not expecting to get rich overnight. You're not putting in $100 today and expecting to make $1 million yesterday, which is the way most traders kind of come in. I came in that way when I first started.
Yeah.
So yeah.
Yeah, no, it's true. Everyone dreams about the 1000x, but people dread the 20% dip or the 30% dip. I have a couple more questions for you, but I do want to make sure I don't leave him out. T Shroom, do you have any questions for Chris?
Well, the question, thank you, Tim. The question that I was just going to ask was like, what do you tell a new trader? What do you tell somebody who's working a full-time job, but has enough in the bank to try to make that transition into just trading full-time, right? Taking that risk. What do you tell them? But I think you answered that question pretty eloquently. And I would summarize it by saying that in addition to understanding TA and having the head knowledge about trading, I think if you don't have a foundation in emotional control and just personal discipline, you're losing half the battle. You have to have those things, have those boxes checked off. And, you got to figure out ways to test that in yourself. And trading is a great way to test that. And paper trading is a great way to test that without any risk. So that's just what I would add. And then maybe the question is, do you do any paper trading? What's been your relationship with paper trading throughout your career?
Yeah. So I think paper trading is a great way to get started, to practice a particular system that you're trying to do. But I think when it actually comes to trading, you actually have to put money in there. And the good thing is it doesn't have to be a lot, right? Everybody thinks, in order to, because confidence is the big thing as a trader. You have to have confidence, because confidence allows you to trust in yourself and to take these trades that you have to take. But to get that confidence, you have to get some winners in there. But you don't have to. Everybody's like, oh, well, I have to put in all this money. No. Very little money, and very little profit. So you basically making trades that if you lose, you're losing a couple of bucks. It makes no difference in your life at all. But if you're doing that and you're consistently locking in profit, that's going to build your confidence. And that confidence is what's going to actually allow you to then make the bigger trades. Everybody thinks they have to come in and trade, full size and everything. But no, you shouldn't. Again, trading is a skill like everything else. You can't go tomorrow and join the NFL, without practice, right? I mean, you need practice, you need coaches, you need mentors, all these things. Same thing becoming a world-class pianist or something, right? Or some kind of great artist. It takes time, it takes practice. Many times it takes coaching and learning and all these things. And that takes time. When you first start out trading, you start here. And everybody's going to do this. You're going to lose money to begin with until you figure it out, and then it starts going up. So the goal is to make sure that you still have money by the time you actually get it down and figure it out and head up.
That's right.
You said it earlier, Chris, the biggest thing there is risk management. And one of the biggest things you need to learn in risk management is to trade with money you're able and willing to lose.
Yes.
Too many people they have $10,000, so they trade with $10,000. It's like, no, don't do that. Like, are you okay if you lose $10,000? No, I'm not okay. Well, then don't trade $10,000. If you can whittle it down, can you afford to lose $100? No, I honestly right now I can't lose $100. Well, don't trade with $100. Can you afford to lose $50? No, I can't lose $50. Don't trade with $50. Can you afford to lose $5? Yeah, okay, I can afford to lose $5. All right, trade $5. Turn $5 into $7, and then $7 into $9, and then $9 into one good trade that gets you all the way up to $20, and then grow that ability to lose money. And then long term, when you're a more successful trader, your risk management will move up. You'll be able to say, no, I can afford to lose $200. I can afford to lose $1,000, to the point where there's people trading right now every single day that they're like, yeah, I can lose $100,000 today. Not a big problem, because tomorrow I'll just make it right back if I do lose it today. And it's all about assessing your risk management and not being afraid to go too low. But I agree with Chris 100%. Paper trading is great. I think it is good, but there's no you need this is a weird way to say this. You need the hormone feedback. You need the dopamine. You need the I guess I started this trend and I don't even know all the hormones. You need the anxiety. You need the fear. You need the success. You need the adrenaline. Again, the dopamine. You need the dopamine that you want. And when you paper trade and you make a good trade, it's kind of like, oh, yay, good, I called it. But when you turn $5 into $10, you get that little dopamine pump of, wow, I just doubled my money. I was emotionally invested and I doubled it. Or you need the corrective feel. I had $10, I lost half it down to $5. You need that, oh gosh, I lost half of it. That's not a lot, but you need those feelings to help teach you things down the road. We only have a couple minutes here. I got one more question for you, Chris, and then we're going to let you go here. What are your thoughts about news in general? So we've had a lot of big headlines here recently. What do you ascribe to? I know some people believe that all news is noise. Some people believe you have to pay attention to news, to the dollar, and that's what moves the markets. When you hear people talk about reading news, what is your advice to people about how to process news with the charts to make wise trades?
All right. So I basically most people that you're going to find out there, they look at the charts and they take this idea that the charts happen and then people react. I come from the other school of thought, which is that, the market itself, society itself has a certain level of whatever their emotion is, right? Are they happy? Are they sad? Are they just kind of meh? And that represents itself in the charts. So if society is feeling, bearish, feeling kind of down, feeling kind of, not great, well, it's going to cause them, they're not going to spend as much. Companies are going to lay off people. Companies are going to, bring down production. And so then you see all this reflected in the chart. And so we see that and we go, okay, well, the news is in the chart. And that's what we mean. It doesn't mean that we know that, okay, SVB was going to collapse on Friday, on that Friday. We didn't know that. But we, looking at the chart, it kind of gets to those levels, especially if you're using Elliott wave, and you expect that pullback. You expect that move. And so for me, I tend to kind of stay on the markets when bigger news events hit. So like the Fed thing the other day, the rate decision, stuff like that, because the markets gets a little, haywire there. There's a lot of knee-jerk reaction. I tend to let it play out and then I get back in. It's just safer that way, because even if you guess, even if you're right in the right direction, it most often it'll pull back the wrong way, knock you out, and then it'll go off without you. So I tend to not play news. I tend to believe news is already in the charts. We ascribe price action in news when it suits us. Price action in news happens all the time, every day, but only when it suits us for our narrative do we actually say, okay, well, that's why. So yeah,
that's a great take, Chris. Great way to end today's show. Make sure after this episode is over, you go follow Chris. His links are down in the description. Follow him on Twitter. Follow him on YouTube. He is a phenomenal mind, and you're going to see a lot more of him here on the Investing Bros channel. We are going to go ahead and cut it for today. We're going to have to make a hard stop here. Got a very, very busy day today. Myself, I will be on Paul Barron this afternoon at 2 p.m. and then on Around the Blockchain tonight at 5 p.m., both of those Eastern Standard Time. So make sure you guys in the Investing Bros community come show support on both of those channels. With that said, also, if you guys want to hear more from us, make sure you're in our free Discord, or you can even join our Patreon. Both of those links are down below as well. There's a lot happening in this very fast-growing Investing Bros community. You do not want to miss out. We will see you guys on Monday, and I'll see you guys over today on Paul Barron Around the Blockchain. With that said, though, here's hoping that Bitcoin closes above 26,000 on the weekly candle, and we will see you guys on Monday. Have a great weekend.